Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Union Pacific CORP quarterly report. Union Pacific Corporation offers a diverse range of transportation services through its subsidiary, Union Pacific Railroad Company. These services include transportation of grain and grain products, fertilizers, food and refrigerated products, coal, and renewables, construction materials, industrial chemicals, plastics, forest products, specialized products, metals and ores, petroleum, liquid petroleum, gases, soda ash, sand, finished automobiles, automotive parts, merchandise in intermodal containers. The stability of Union Pacific Corp's stock price over the past year can be attributed to a combination of factors. Strong financial performance has been a key contributor, with the company consistently reporting positive earnings and beating analyst estimates. Improved operational efficiency and pricing strategies have also played a significant role, as evidenced by the improvement in operating ratio and core pricing gains. Additionally, Union Pacific's commitment to shareholder returns and debt management has helped maintain investor confidence. The company's quarterly dividend payments and debt reduction efforts demonstrate its focus on providing value to shareholders while managing its finances responsibly. While market headwinds and industry-wide uncertainties have presented challenges, Union Pacific's robust performance in other areas and its operational discipline have helped mitigate more significant downturns. The ongoing pursuit of a merger with Norfolk Southern is also seen as a strategic growth initiative that could bring benefits despite associated costs. Overall, the combination of strong financial performance, improved operational efficiency, commitment to shareholder returns, and strategic growth initiatives has contributed to Union Pacific's stable stock price over the past year. The primary drivers of revenue growth or decline can be summarized into several key areas. On the growth side, freight revenues increased by $159 million, bulk revenue grew by 7%, and industrial revenue rose by 2%. Additionally, core pricing gains and favorable business mix contributed to a 3% increase in revenue. The company also saw significant growth in specific sectors such as grain and grain products, 4-6%, coal and renewable energy, 13-20%, and industrial chemicals and plastics, 8-10%. On the decline side, other revenues decreased by $6 million, and other subsidiary revenues dropped by 10% in 9 months. Lower fuel surcharge revenue and reduced international intermodal carloads also contributed to a decline in revenue. Furthermore, premium freight revenues were 5% lower due to reduced volumes, while automotive shipments declined due to production cuts. Overall, these factors highlight the key drivers of revenue growth and decline for the company. Net income for the company increased significantly, rising by $305 million, or 6.1% from $4,985 million to $5,290 million. This growth was consistent across both QTWO and YTD 2025, with a 7% increase in QTWO and a 6% increase in YTD. Profit margins also saw an improvement, with the operating margin increasing from 39.8% to 40.5%, and the net profit margin rising from 27.6% to 28.9%. This suggests that the company's ability to generate profits has become more efficient. However, it is worth noting that gross profit margins may be decreasing due to increasing depreciation and other operating expenses. The company's financial performance indicates a consistent generation of positive operating cash flow. In 2025, the company generated $7,065 million in cash from operating activities, while in 2024 it was $6,684 million. This trend suggests that the company is effectively managing its operations to produce a steady stream of cash, which is a key indicator of financial health and stability. The company's debt level and interest expenses have undergone some changes over the past year. The total debt has increased from $30,192 million in 2024 to $31,807 million in 2025, with a slight decrease in debt due after 1 year. However, this increase is not significant enough to raise concerns. In terms of interest expenses, there are mixed signals. On one hand, the interest expense has increased from -$314 million in 2024 to -$327 million in 2025, indicating an increase in costs. On the other hand, the interest expense decreased by 2.8% from $957 million in 2024 to $984 million in 2025, suggesting a slight reduction in costs. Overall, while there are some fluctuations in debt level and interest expenses, they do not appear to be significant enough to raise major concerns about the company's financial health. Management's outlook on company strategy. The company is poised to create a transcontinental railroad through its merger with Union Pacific. To achieve this vision, management will continue to pursue independent business plans and growth strategies until the mergers are completed. In terms of financials, the company expects its capital plan to reach $3.4 billion in 2025, consistent with 2024 levels. This investment will support growth, improve safety and operational efficiency, and enhance resiliency within the network. Management prioritizes free cash flow and cash conversion rate as key metrics for evaluating financial performance. The company has made several significant transactions in recent years, including acquisitions and divestitures that have impacted its financial performance. Acquisitions include the pending acquisition of Norfolk Southern Corporation, which is expected to bring new opportunities for growth. This deal is still pending further discussion, as noted on page 18 of the report. On the other hand, the company has also made several divestitures, including the sale of intermodal equipment in 2024, resulting in a gain. Additionally, there were gains from the sale of intermodal equipment and contract settlements in the second quarter of 2024, although specific values are not specified in the report. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, with $2,418 million in 2025 and $2,403 million in 2024. Additionally, the company has actively repurchased shares, with 11,857,159 shares bought back in 2025 alone. This demonstrates a commitment to returning value to shareholders through both cash distributions and share consolidation. That concludes the financial summary for Union Pacific CORP. Feel free to comment below, and I will be happy to answer them when possible.